Hi everyone, today we're talking about Disney or Walt Disney stock, and today I'm going to cover why I think Walt Disney stock could be going up to $200. Now Disney stock is a stock that I own. It's a stock that I've been buying really heavy over the kind of last few weeks with the stock market going down. I have slowed my buying down recently over the last 2 weeks. I did buy one company that I do already own, and I'll reveal that probably on my next video. But today I'm going to cover Disney stock and if I'm going to buy some more shares and why this stock is going to $200. Now Disney is another company that's been really hurt because it's had to stop a lot of its operations, and that's meant closing a lot of the theme parks that Disney own, and as well as that it's really hurt the movie releasing because mostly a lot of the cinemas are closing down, and that's delayed to a lot of these movies that have been delayed, and that's hurting Disney as well. But the really positive thing with Disney is it's just announced a new income stream that it's kind of been releasing over the last 5 months, which is Disney Plus, and we'll be covering that in the video as well, and a lot of other reasons why it's going to be a $200 stock in my opinion. And I made a few videos in this series before. I've covered Microsoft, Apple and Facebook, why they're going to a certain price, and 2 of them 3 stocks have actually hit the prices that I made in that video since I made them last year, which was Apple stock, which went up to 250, Microsoft, which went to 150, and Facebook was only 10% off, reaching $250, which I mentioned before, which is another stock in that kind of series, and I believe that eventually Facebook will get to that price. And I kind of make these predictions about 2 years down the line, even though I hold stocks for 2 to 5 years and I do want to make money. And I talk about, when I'm always talking about investing, I say, where's the stock going to go in 2 to 5 years and how am I going to make money on this stock? And Disney is a prime example that if I hold it for 2 to 5 years, eventually I'm going to make money on this stock. And a $200 price target from here is about 100% upside, so it would be a nice gain. And like I say, I think it could get there in 2 years for Disney. And as always guys, smash that like button and we'll get into Disney stock. So it's currently priced at $104. It's come off its lows. At its lows it was about $90, and it's still on about a 30% discount, which is quite a healthy discount. A lot of the stocks have kind of pulled back. Disney hasn't rallied so much, but there has been some news come out. And that news is that Disney has hit 50 million subscribers on its Disney Plus. And just to show how amazing that is, it took Netflix 16 years to get to that many subscribers. And I know there's a lot of different things that streaming wasn't that massive as long ago, and I understand that kind of perspective, but 16 years it took Netflix to get to this 50 million subscriber mark. Disney has just done that in 5 months, which is amazing. And a lot of Disney Plus kind of subscriptions have only just kind of come up in Europe, and as well as that, it's not exactly worldwide yet. There's still a few countries for it to be launched yet. So it has been fantastic amount of growth from Disney, 50 million subscribers, and that kind of reflected with a little bit of a 7% upside in the stock last week. So there's amazing subscribers that have just come from Disney, and I cannot say this as massive as it is. This is another income stream into Disney. This is an income stream that did not exist a year ago. And with this kind of news, it pushed the stock up to $150. Now the stock's come down $100 and it's at pre-Disney Plus numbers. And Disney have hit this run in because it's absolutely amazing the subscribers they've got. It's another income stream, and as well as that, I believe that Disney has the potential to overtake Netflix as the biggest streaming service and become the biggest amount of subscribers. The reason why is because it has a lot of own content. So for example, the Mandalorian series has been absolutely massive on Disney Plus. A lot of, probably some reason why people have gone and got that. But that's only like one unique show it's had for Disney Plus. Imagine when it starts making all these characters it owns and it's able to pull out a Frozen, or it could come out with a bigger Star Wars kind of series that it runs. I know the Obi-Wan Kenobi series will be on there, and that's going to pull in so many subscribers, and it has all these brands already. Netflix is trying to create its own brands, which is so much harder to do. They've been successful with a few of them, but Disney have so many brands that can pull in from aggressively buying as well over kind of last kind of year, 2 years, other brands as well. They have so many brand advantages over Netflix, and the pricing structure as well is fantastic. And another income stream that they can pull off this, and what Netflix don't do as much, is they will be able to push the merchandise in a lot of the stores as well, and that'll also push into the theme parks as well. So that kind of links in with all the income streams that Disney have going on, and this income stream that is added to Disney is fantastic. And you look at the growth that Netflix pulls out year over year, imagine that kind of added into what Disney already do right now, and the revenue and EPS are really going to benefit from this kind of income stream over the next 2 to 5 years. And I believe that's one reason why the Disney share price will go up to $200, and that's why I'll make a lot of money, is the explosion of Disney Plus. So as well as that new income stream that's going to be massive for Disney, there's the parks, which I've got to say they've carried on improving, and eventually they will reopen as well. We've got the films, and I've got to say the films list for this year is the weakest part of the company. I do think the upcoming films aren't the greatest compared to some of the other ones that have been out there. Last year we had some fantastic releases for Disney with, you know, the Star Wars, the Avengers, Frozen. This year is not looking as good, and maybe next year, but at some point it will bounce back, and like I say, that'll lead to people wanting to go to the parks. And also merchandise leading off that. And the third thing as well, the other income stream, is we've got the merchandise as well. So you can see that Disney have 4 great income streams right there. And they also have a few little mini ones on the outside that you could also add in there. But with the media, the parks, the films, the merchandise, some really fun 4 great income streams right there. Like I said, the revenue and EPS as well will get hurt this year. The EPS was going to get hurt anyway because of the investments they've made. But in the long term, with the Disney Plus edition as well, and when the parks eventually open, there's going to see a good massive growth in the EPS and revenue front on Disney as well. So long term, there's going to be strong EPS and revenue growth from these income streams. The balance sheet is okay. There's about 6.8 billion in cash. There's 48 billion in debt. But like I say, it's not easy for a company to build these huge theme parks and make these films that they do. So it's never going to be a company with an amazing balance sheet. But that's a fair chunk of cash there to try and help with what's going on with the situation in the world right now. Now, these little bit of dividends pick up, which they do like to grow. It's a small dividend of 1.6% yield, and it is a 31% payout rate, so it's quite a healthy payout rate. Now, at the moment, there's a lot of speculation whether Disney will kind of pause this dividend right now, but it all depends on this Disney Plus growth numbers. And when we see the Disney Plus, if the numbers are pretty good, it looks like the dividend could be safe. Like I say, even holding these shares though long term, we should have a little bit of a growth dividend there when everything gets back to normal. Now, one of the negatives that I have seen with this is the CEO change with Bob Iger leaving. But at the same time, the CEO that's now taken his place has been at Disney since 1993. It's an internal promotion, and like I say, Bob Iger's still on the board, and I still expect him to do a fantastic job, because when you're doing a internal promotion with someone that's been there since 1993, you know, it's not going to dramatically change. He knows the company in and out, and it's going to, I think that the Disney will be totally fine with the kind of CEO change, and I think that's kind of being overblown right now. And like I say, with an internal promotion, you've still got all them board members around you that have been there, so I see that totally being fine for Disney in the long term. So overall, over the past few years, we've seen Disney do fantastic with just the parks, with the merchandise, with the films, and now imagine a 4th income stream added in there, an income stream which has been perfectly timed. Like, if you're going to put an income stream of a streaming service in, do it when everyone's at home. Fantastic timing. So I see some fantastic numbers coming out with this new income stream. And to have a company with a moat like this, how hard is it for a company to come in this space and knock them off? It's going to be really tricky, and I see Disney a safe company that will get through this, and in the long term, with this new massive growth sector that they've entered, I think they're going to dominate that area as well. So the streaming service for me, with the brands, with the shows they're able to put out, is going to be fantastic for Disney. And like I say, where I'm going to make money in Disney in 2 to 5 years, the streaming side will explode. I'm sure the films will do really well. We're going to see some strong releases. That'll lead to merchandise sales and people wanting to go to the parks. And in the long term, like I say, Disney, $200, I see it in 2 years, to be honest with you. 5 years down the line, if you're holding this company long term, I could see us in 5 years starting to push that $300 mark, which would be absolutely fantastic. So for me, a really strong long term hold. And will I buy more shares in this? I am thinking potentially when the stock market opens up on Monday, even though the stock market has gone up slightly and there's potential for a pullback, I might just nibble at a few more shares, because at $100, Disney, with all this going on, seems like quite a big bargain with a lot of upside. So on Monday, I am tempted to buy a few more shares in Disney. I'm going to see and wait and see what happens with the stock market. Depends what happens in pre-market and if it's going to get taken down. But I'm tempted to just buy a few more Disney shares when the market opens on Monday. But at the same time, I'm still going to hold some cash in case the stock market goes down going forward. But I thought I'd update you with this and talk about Disney stock. And as always, guys, smash that like button, subscribe if you haven't. I'll see you in the next video.